Um, so welcome to this presentation this afternoon on taxation. Now the bad news is I'm not going to be able to make a tax expert of you, but I hope that after this session this afternoon, you will have a much better understanding about what taxation is all about, and hopefully also some ideas on how to minimize your tax liability. Now, my name is Jaco Verscheer. I am one of the directors of General Blue Star. I'm a chartered accountant, a registered tax practitioner, and I would like to start today's session looking at what is tax. Now, there's actually very good reasons for tax, and those of you who have studied the Bible, who have read it before, will know that even from the Bible's time, there was tax. The moment the people said, but they wanted the king, they were reminded by the prophets, but listen, you will have to then pay tax to the king. So it's a very long background for tax. And the reason that we need to pay tax is there are certain expenses that we as individuals cannot afford on our own. It's no use for every one of us to build a road from Johannesburg, Bloemfontein, Potchefstroom to Cape Town to use. So tax is actually when we group our money together to build infrastructure and do certain expenses that's for the good of the whole community. Important is that this expense can be up to 25% of your total money that you spend every year. So it can be a very, very large expense. And for that reason, we really need to manage it. And then I have there in my gray block just a reminder that to evade tax is a criminal offense. I don't know whom of you know it, but they could never catch one of the big gangsters, Al Capone, in the United States for whatever activities he did, but he was eventually caught on tax evasion. So don't let the tax man catch you. Now, there are many types of tax out there, and I'm going to just discuss today 7 of the most general taxes that we are involved with in South Africa. First is the income tax. That's levied on all our income and profit. It comes off your salary at the end of the month. And then we have capital gains tax. If you have an asset that you sell and you make a profit, you pay some tax on that. You have donations tax, and that basically goes with the whole idea of estate duty. When you die, you have to pay tax on your assets. That's sort of a wealth tax already. So the politicians, sorry for you, you are not new wanting to introduce wealth tax. It's already there. You have to pay a certain tax, but you know what can happen. People can just then donate everything that they have before their death. So that's why there is donations tax. If you give too much of your assets away so that you don't pay estate duty, you will pay donations tax on that. So estate duty is what's paid when you die. We have transfer duty if we buy a property that I will talk to. Value added tax, I will share some ideas on. I'm not going to spend too much time on dividend tax. That's if you own shares and you receive a dividend from that, it's actually already after tax because the tax is deducted from the money that you will get. So, paying taxes. It's illegally if you are trying to evade tax, like not declaring all your income, and that includes your income from Bitcoin, cryptocurrencies, etc. Not declaring all your income, so you don't tell SARS about the property that you're renting out, etc. And claiming expenses, that's not allowed. But you can reduce your tax liability legally by taking advantage of tax exemptions, and that's why you need to know what's available. Legal rebates and certain allowable expenses that I will spend some more time on later. so that you don't need to pay the maximum tax. Let's start off with income tax. When will you pay income tax? Well, basically you start from the first rand that you earn, but there's a rebate. So in actual terms, you only start to pay tax in South Africa once you earn more than 87,000 rands per year. If you earn less than that, you will pay no income tax. Who must submit a return to SARS? Well, the moment you earn more than 500,000 rands, or you earn income from more than one source. So if you just have a salary, let's say at CUT, and you earn 400,000 rands per year, basically you don't have to submit a return. But if you also get some interest income, or you are a lecturer and you are doing some marking for other universities, the moment you have more than one source, you must submit a return to SARS. And in order to submit that return, you have to keep some documents. Copies of your IRP5s, proof of all your interest income that you received, documentation of all other income, your medical expenses, your retirement annuity fund certificates. If you want to claim against traveling allowance, you must have a logbook, etc. So it's very important. I've just submitted my tax, and then SARS see, well, they want some documentary proof, and you have to submit proof for everything that you have said. And remember that your employers send copies of your IRP5s to SARS immediately. So they already know of that. Your bank will send the details of the interest that you have earned to SARS also. So it's no use to try and hide that. And with, again, with things like Bitcoin and cryptocurrency, they're already trying to work with those exchanges like Luno to also submit them actually the details of your trades. Then how is this income tax collected? And people often think, but your final tax assessment and provisional tax are extra taxes. No, it's not that. It's just a way in which SARS actually collect your taxes. So you pay income tax in total for the year, and then SARS collects it monthly from the tax that's deducted from your salary. And then if you earn other income, business income, interest income, you become a provisional taxpayer, and then every 6 months you submit basically a record of your estimated income, and then SARS may say, but listen, you are generating some other income that's you don't pay tax on a monthly basis. So every 6 months, you must pay some extra tax on that extra income. But it's not a separate tax. It's still part of income tax. And then when you submit your final return to SARS, they may say, but listen, you have paid too little or too much tax, and then you have to pay on your assessment. But it's all part of the same income tax, just different ways in which SARS collects it. Now, how is your income tax calculation done? And I must tell you, I'm a chartered accountant. As I've said, I've been doing tax for many years, but this last 2 years, I've even went to a friend that studied with me and said, listen, I don't want to deal with SARS anymore. Please submit my tax return. You know all the ins and outs, etc. And to get that professional advice, I realized that I actually pay less tax. But it's still good to understand, then you know what to get together for that tax practitioner. So SARS will start with all your income, salary, rent, dividends, all of those. And then certain income is exempt. Your interest up to 23,000 rands per year, you can deduct. So there you can already see, you can have some investments that earn income because you won't pay tax on the first 23,000 rands of the interest income. Your dividend is excluded because it was already taxed in the hands of the company who paid the dividends. and then the first 40,000 rands of your capital gains, that's also excluded. So first, then SARS take off all these exempt incomes. Then you can have certain deductions. Up to 27.5% of your income can be contributed to your pension fund. Those of you who are at the CUT, that's what you contribute there. And what you contribute extra to a retirement annuity fund. So at this stage, we are contacting all our clients and telling them, listen, if you have some extra money that you want to put into your retirement annuity fund, do it now before the end of February so that you can get that tax deduction for this financial year. If you make donations to certain approved public benefit organizations, you can get what is called a Section 18A receipt, and you can deduct that money because government wants to motivate you to contribute, say, for the organization of the blind and other NPOs, and you can deduct that for tax purposes. And then you can also deduct your traveling costs if you receive a travel allowance or commission and you want to claim against that, but you must have a logbook. And SARS has certain prescriptions on how that logbook should look. And that brings you then to your taxable income, which is then used in a scale to calculate your tax payable. And then if we have calculated your tax payable, there's certain rebates and credits that you can deduct from the tax that you must pay. So here is the table for the 2022 tax year. And you can see from the first rand that you earn up till 216,000, you pay 18% of your income for tax. And the moment you start to earn above 216,000 rands, you pay that 18% on the first 216,000, which is 38,000, plus then 26% of the money above 216,000. So you can see from this table that the more you earn, the higher percentage of tax you will pay. So that people earning more will pay proportionally more tax. So again, that's already a distribution of wealth. And you will see that the moment you earn above 1.6 million rands, and there are not many of us that fall in that category, especially if you are like me, just earning a salary and maybe some extra income. But above that, you will pay 45% tax on every rand that you earn additionally. And so it becomes more and more important the higher your income to manage this tax liability and to get all the deductions that you can get. So we use this to calculate your tax liability, and then from that tax liability, if you are below 65, you will get a deduction of 15,000. And that's where we get to the 87,000 that's not taxable. Because if you earn 87,000, your tax will be 15,000 and you get a 15,000 rebate. So you will pay basically no tax. And then you can also get R664 per month for the taxpayer and one dependent for medical aid contributions. And for every dependent after that, 2 to 4 rands per month. So if you contribute to a medical scheme, SARS will give you basically per adult dependent 662 rands off, and then for the first 2 and everyone after that, you will get a reduction in your tax payable of 2 to 4 rands. So, ladies and gents, that's income tax. Any questions perhaps so far? Okay, let's continue with capital gains tax. How that works is that, let's say you sell shares for 300,000 rands. The cost price of that shares was 200,000. You make a capital gain of 100,000 rands. Your first 40,000, you'll remember, is exempt. You don't pay tax on the first 40,000 rands capital gain you make. So in this instance, you make a capital gain of 60,000 rands. And I just realized there I have a typing error there. It's actually 40%. So how it works then is that 40% of this 60,000 rands, 24,000 rands, will just be added to your income, and you will pay at your normal income rates on that taxable capital gain. There's a few important things. Your own house, up to 2.5 million capital gain that you get is excluded. You won't pay capital gains tax on vehicles, but you and I know you will almost never make money out of a vehicle, so it's not really relevant. And then everybody gets every year the first 40,000 rands capital gain you don't pay any taxes on. Donations tax, you are allowed to donate 100,000 rands every year without paying any donations tax. The moment you donate more than that, you will have to pay 20% donations tax on that. So if I donate 200,000 rands, the first 100,000 rands will not be subject to donations tax, but I will immediately pay 20% on the extra 100,000 rands. So I will have to pay SARS 20,000 rands donations tax. Now, fortunately, if you make any of those donations to the NPOs that can give you that tax certificate, that's not included in your 100,000. And you can donate as much as you like to your spouse. It's also not subject to donations tax. So we often use these donations to reduce the value of your estate so that you pay the 100,000 rand, so that you pay less estate duty. Because estate duty is levied at 20% of the first 30 million of your estate. So again, very few people's estates will be larger than that, and 25% over 30 million. Good news again, there's an exemption of 3.5 million. So if your estate, that's all your assets, less your liabilities, is more than 3.5 million, you will pay 20% estate duty on the amount above 3.5 million. So let's say your total assets less liabilities is 4.5 million. You die, the first 3.5 million will be deducted, so you are left with 1 million, and on that million you will pay 20% tax, 200,000 rands. So you can see that it can be beneficial to talk to somebody to help you to reduce the value of your estate legally so that you pay less estate duty. Good news again, whatever you leave in your will or in your estate to your spouse, it's not subject to estate duty.
So I have a question there on
Yes,
the previous
you're welcome.
slide. Not on this one, the one before this.
Okay.
Yeah, there where it says excluding the spouse. Can you elaborate more on that, please?
It just means that whatever you donate to your spouse, like with the estate duty, is not subject to donations tax. So let's say, for example, I want to give my wife 500,000 rands, donate it to her. I can do so, and I will pay 0 donations tax on that.
So I'm trying to understand it in this manner. Let's say I've got a salary from CUT and then that was taxed. And now I want to donate, let's say that 500,000, like you're saying, to my spouse. How am I going to benefit on that? Because I've already paid tax on the income tax.
Maybe you want to do it because you would rather have her invest it. Maybe she does not have income. and you would like her to rather invest it and grow some assets in future that you don't want in your name, that can be a reason. Maybe your wife wants to buy a house, but she will not qualify for that, or your husband, and then you can donate money to them to buy that house, or maybe a share in a business, and you don't have to pay donations tax on that. So there's not very much applications, but there have been instances where we have assisted clients, for example, if they have a huge share portfolio, to split the tax liability, to have half of that in the husband's name and half of that in the spouse's name. I hope that makes sense, Lucky.
Yes, it does. It does. Thanks.
Okay. Please, ladies and gents, ask me questions as we continue. Elsewise, I will just keep on talking. So transfer duty is another tax that you pay if you buy a property. And you will see, fortunately, on the first R1,000,000, you pay no transfer duty. The moment it goes above R1,000,000, up to 375,000 rands, you will pay 3% transfer duty, and you will see the higher the value of the property, the larger the amount of transfer duty that you will pay. So it's always important to understand that when you're buying your own house, and we talked about buying a house or a property last year, there are some costs involved. And you can see here, if you buy a property of 11 million rands, you will pay about 1 million rands in transfer duty. So that's a large extra, or that can be a large extra cost that you have to put down in cash when you buy your property. Any questions on this? Okay. Then I want to share a bit with you about VAT. Now, the current VAT percentage is 14%. How does VAT work? VAT stands for value added tax. And if I try to explain this picture to you, hopefully you will see how VAT works. So let's say we have a canning factory that sells goods to the supermarket at R2.28. So in total, 45 rands. That's what they sell it to the supermarket for. So included in that 45 rands is tax of R5.60. Okay, that's tax of R5.60 that the supermarket actually pays to the factory. And let's say they had some inputs for half of that amount. They will have to pay over the other half to SARS. Okay. So eventually the initial factory, or the farmer, or the whoever started it, will pay some tax. If we make extra tax here, we will pay on that, on the value that this company has added. And when we get to the supermarket, if they now sell these cans of goods for 51 rands, they have an output tax of R6.30, the 14% that's included in the 51 rands, but they have paid R5.60. So on the value that they have added, there's 70-cent additional VAT that then they have to pay to SARS. At the end of the day, us, the consumer, will pay the R51.60 and the whole VAT of R6.30. That's eventually what will happen. Me and you pay that VAT. But every person in the supply chain up to now will pay a portion of that VAT. The regional factory will pay R2.80 on the value that they added. The canning factory will pay R2.80 on the value that they have added. The supermarket will pay 70 cents on the value or the profit that they have added. So that in total, all of them have paid to SARS in total R6.30, which is the overall VAT that was charged on those items. So just to explain to you a little bit of how VAT works, but at the end of the day, it is us, the consumers, that ultimately pay the total VAT bill. Dividend tax, that's currently calculated at 20%. So if you have shares, let's say, for example, in a company like Sasol, and they pay you a 1,000 rands dividends, by law, they have to deduct 20% of that. That 20% they will pay to SARS, and you will receive the remainder 80%. So you will get 800 rands in your pocket. And that's why SARS do not add your dividends to your taxable income when they calculate how much tax you must pay, because the company has already deducted a dividend withholding tax from your dividends. So, ladies and gents, that's the basics of how tax work. Most importantly, probably this afternoon, is how can you save on paying this amount of tax? And the first one I have there is record keeping. Keep the slips of expenses that you occur in generating income. If you have a small business on the side, anything that you buy, anything that you spend in running that business, or if you are earning rental income, all your expenses that you are paying. If you have medical aid expenses, keep all those slips, because you can add that together and claim some of those expenses back, and your accountant, your tax practitioner will be able to assist you with that, but they cannot assist you if you have not kept all the slips. So you must keep all of those together. I now, because of my work at Genwell, I work from home. I'm currently in my study, so I claim study expenses, but SARS wants a copy of the plans of my property to show what portion I use for the business. I must have copies of all my municipal accounts to verify the amount that I want to claim for tax purposes, all those types of things. Any retirement annuity contributions that you have made, keep those certificates that you will get from Glacier, from Sanlam, etc., so that you can also claim those expenses back. Your Section 18A donations that you have made, keep those slips. So I would really, for this, to recommend, if you are not doing your taxes yourself, and as I've said, I don't even do it myself. I don't have the stomach to communicate with SARS. So go and talk to your tax advisor and ask them, listen, what do you want from me so that I can get the maximum deductions? Lastly, manage the value of your estate. If your estate is today more than 3.5 million, that means taking into account your house, your investments, maybe a farm or two. If it's more than that, it would benefit you to look at estate planning, to see how can you structure your estate to reduce your tax liability. And you're welcome to contact us at Genwell. You're welcome to talk to your tax advisor for legal ways to, for example, make use of donations, etc., to reduce the value of your estate, so that at the end of the day, you don't pay that 20% estate duty. And you can see that for every million rands, your estate is more than 3.5 million, you will pay 200,000 rands estate duty. And we don't want that. that's also the reason why it's important that you talk to an accredited advisor when you retire, so that your retirement funds are structured in the best way to reduce your tax liability, to reduce estate duty, etc. But that's a talk for another day. That was a mouthful. And we are recording it, so you will be able to watch it again. But I do want to give you an opportunity, if you have any questions on it, or if you have some comments, if this really helped you, or if you maybe have some experiences, you know that these lunch hour sessions are informal, you are really welcome to share that and ask your questions. Okay, well, it doesn't seem like there are any questions at this stage. Well, there's something in the chat. Let me have a look. Thank you, Rika, for your comment. You think it was a good overview. I hope it makes sense, and that maybe you just understand what tax is, the different taxes that you pay, and how to reduce it. Okay, ladies and gents, I'm not going to keep you longer then. Thank you for joining our GenWell lunch hour discussion on tax. Watch out next month, and Estelle must please help me if I have it wrong, but I think we are, what are we talking about next month, Estelle? Sorry, Estelle, we cannot hear you. Okay, I think next month, if I remember correctly, we are talking about retirement. So the whole month, next month, our big seminars is on retirement. We are going to talk about retirement still this year. We are going to talk about tax-free savings accounts. We are going to talk about how to deal with finances in your marriage. We will be talking about should you borrow or lend money to a friend, and many, many, many other topics. So you will be invited, and you will also get a link where we will share all these presentations on GenWell's YouTube channel. So ladies and gentlemen, from me, Jaco Fischer, and the GenWell team, have a great day. We see you in a month's time.
Thank you. Thank you, bye.
Bye-bye.